Now, the latest days are currently totally crazy. Now, we saw a drop of almost 2,000 points at the Dow Jones in this week, starting on Monday, and then a small comeback on Tuesday, and now here we are. And therefore, I'm seeing already good opportunities to buy into stocks, because now, obviously, over the last couple of weeks, the stock market lose some weight from the all-time highs up to 20 or 30%. And this obviously gives us new opportunity that pops out on the stock market. And we are looking into 7 of those undervalued stocks. We will look into their business model. How affected are they? How is the PE, PS or PEG ratios, and how we can benefit of all of this crisis? All about it here in this vlog.
Wolf of Dubai.
Another question that you might ask is how long this downturn can last. Now, if we are looking into recession, then even a recession will lose about 20% technically. But within the recession, if let's say we declare backwards, because forward it's not possible to say that there will be a recession, but backwards we can say, okay, this time was a real recession. And usually this can take between 6 months, 3 months, or 1 year. But all in all, we should see a very fast recovering stock market, because the people have not that much choices out there to invest in other things. That's why stock market went now on discount. As soon as the overall panic and news will calm down, we see now a couple of good news coming in, countries taking maximum measures to declare this as soon as a victory over the whole topic. And therefore I think and I believe that this will be maybe shorter than we think. That's definitely will be not a multi-year crisis or shock for the markets. The markets can be quickly up again, more faster than you think. And don't forget, the worst days are also followed by the most lucrative days. And if you're missing out on this lucrative days, then you actually will lose a big chunk of money in the end of the day, long term speaking. Therefore I believe that buy now, start to buying now is maybe a good choice. However, this can still go down, and it can be a dead cat bounce short term, but long term definitely everything will go up. Now, the first stock is IRobot. IRobot is the market leader in house robotics for cleaning, and their stock was absolutely crashed on Monday with minus 15% almost. From the last highs 3 months ago here in Feb, we saw a decline of 31%, guys. And over the terms of a full year, we had a decline from $128 to about $39 below the 40 mark, and this company lost about 70% of its value. Now, first they were affected by the trade war US and China because they are producing in China, but then the overall health situation was not benefiting this stock as well. But they are having revenues of about 1.2 billion, and if you're looking into the market cap down here, you see that the market cap is below the revenue that this company is doing. And therefore, if the PS ratio is below 1, I'm definitely buying the stock or putting this on a watch list, because this is definitely an undervalued stock. PE ratio 13, beautiful stock, beautiful company, beautiful product, market leader. That's why IRobot is stock number 1. Beyond Meat is another stock that lost a lot on Monday, about 9% of the overall trade. And when we see the highs in the last couple of months, then we see in February we had 126, and now we are around 87. this is a very good course for this company. Minus 30% discount on a very great growth stock in the artificial food business. And I made a couple of vlogs about that. So if you want to know more about Beyond Meat, check out my other vlogs. A beautiful American stock, AT&T, because AT&T just got new investors on board. Elliott Management, they are very known as grasshoppers, and if you're looking into the stock of AT&T, it was quite flat over the last 6 months here. Not the major up or down, but then obviously over the last couple of days they lost also not that much, but still 12%. Obviously the yield of their dividend is now nicely 5.59% on your capital that you invest. And I believe that, first of all, they're one of the first priorities of Elliott Management that also went before to eBay and increased their share price by 60%. Or other companies. Just recently, we heard that Elliott Management, a grasshopper company, that installing their measures in terms of management and productivity of the company. And, I definitely see AT&T growing from this investment, and therefore this beautiful dividend stock is definitely a stock for the next couple of days, and you get it here on discount 11%. Apple. I said it many times, but I will say it once again. You can always buy Apple. If there is just one stock that I would always trust for the rest of my life and they will put me to sleep for 20 years, I would put my money on Apple, because Apple is just, as Warren Buffett said, one of the most beautiful business here on earth. They are super profitable. They have a great brand. They are a great cash-rich cow, and they lost about 16.7% of value from the highs of mid of February when all this downturn started. And they are paying dividend currently about 1%, which is not bad. The PE ratio is still a little bit high, so this one is definitely something for the watch list. But if the market goes up, Apple will go up in terms of value, definitely. Don't forget, the 5G iPhone is just in front of the door, and therefore Apple is definitely an undervalued stock in terms of the holder of the downturn. We saw Apple obviously and the other stocks as well to a cheaper level before, but these opportunities, I think these companies that I just mentioned here are quite undervalued on the perspective over the last couple of months, over the last couple of years. Obviously there's still room, but you can time the market? No, Warren Buffett even cannot time the market. It's time in the market. So buy the stocks now or start to buying and add every month, and you will be super happy. The next one is Amazon, and why I think Amazon is not even undervalued on the last couple of performance, but also is a good buy in this kind of crisis, because people are panicking and buying more. We have seen this in retail space, but this will not be different from Amazon online. Obviously, if it's face masks, toilet paper, or any other stuff that people are panicking of, and with a 16.25% discount, this is something that definitely belongs into your portfolio on the long term. They will definitely catch this up and much more, because Amazon just keeps on growing. If the people stay even more at home, they order more, and so on and so on. So I believe also the effect will show maybe in the Q2 or Q1 already. We shall see, but definitely Amazon should be on your list. Twitter on Monday actually had a plus during the day, where everything crashed day plus, because they just announced a partnership or investment partnership, however you call them. Actually, Elliott Management bought into Twitter and they want to change the management. And I believe Elliott Management is a great company to bring companies forward. And that's why you have seen on Monday that actually the stock started at around 30, 31, went up 14% intraday, and then went back down from 35 to about 33 as of this recording. I still believe Twitter is an interesting opportunity, especially in the tech and software business. So a PE ratio in this industry of 17.36% is quite interesting, is undervalued definitely. If you're looking at other companies like Facebook, they have such much higher PEs, and therefore, you know, Twitter might be something for your portfolio. Last but not least, obviously Tesla. Tesla had a very brutal day on Monday, 14% almost loss. And if we are looking into the last couple of 3 months, you know, we went down about 34%. Now, but do we really want to complain about Tesla? No, we don't, because if you look into it, the last couple of months were just absolutely insane. Let's say from 9th of December still till 19th of February, it was a plus of 158%. And if you are looking towards now, it's still 90% plus. So what we are talking about here, nothing major for the Tesla stock. And I believe that Tesla will move up and will be one of the bouncing stocks that, you know, will use the fuel or the energy that they will get totally to rebound on all-time high levels. And, you know, generally speaking, all in all, you have to think about, if you're buying one of the 7 businesses, you are really buying beautiful businesses. And in the end of the day, even if the short-term crisis or shock or panic, however you call it, will influence the price of the stock, long term, like in 2, 3, 5, 10 years, these companies will double or triple or even 5 times their value, their revenue, you know. So in the end of the day, you're buying now on the cheaper side, and then, you know, be under very, very nice umbrella of gains over the long terms of multiple years. I hope you enjoyed this video. It takes a lot of research. Make sure to thumb up and subscribe, and see you tomorrow. Thanks.